Hey, what's up, my friend? So, in today's episode, right, I want to share with you five likely reasons why you're losing money in trading. Okay, reason number one, you're not doing the work. I know this might sound funny, right? You might be thinking, no, Rayner, I am doing the work, Rayner. I go to trading forum, I check out what other traders are talking about, I learn their strategies, I put on a few trades and stuff like that. Come on, let's be honest, that's not doing the work. That is the fun part, really, right? It's like, people who wants to build muscles, right? They thought that, doing the work is doing a few bicep curls, a few bench press, that's doing the work. Well, that is for beginners, but if you are a pro bodybuilder, the work is actually your diet. Your diet is like 70-80%, right? Of everything, right? Your nutrition and stuff like that. It's like, forcing yourself to eat more food so you can build more muscle. You eat for the sake of building muscle and not for the taste and stuff like that. The grind, right? That's how people, bodybuilders, they build muscles. They do the work. And it's the same for trading. Doing the work doesn't entail, going to forum, checking out analysis of other traders, opinions and stuff like that. That's the fun part, right? Just like, doing bicep curls. That's the fun part. The work here in trading, right, entails verifying, right, whether the concept, the ideas, right, that you have come across, whether it works or not. That involves, forward testing, back testing, developing a trading plan, journaling your trades. This is the work. This is the grunt work, right? Just like how, bodybuilders have to, swallow down those, chicken breasts that are being steamed for the sake of, competing at competition. Same for trading. Your work here entails, journaling your trades, back testing, forward testing, etc. This is the work. This is the grunt work. And this is what separates winning traders from losers. Okay, if after hearing this you feel that Rayner, he's talking BS, then really, all the best of luck to you. You can continue surfing, hopping from forum, checking out new strategies, and maybe one day, right, you might understand where I'm coming from, or maybe you might find success in one other way that is different from what I experience. Okay, number two, you get swayed by news and opinions. So here's the thing: when you don't do the work, right? When you don't have any proven trading strategy, when you don't have something concrete, right? Your beliefs are very soft. It's like jelly, it wobbles. So every time someone has an opinion, or sometimes there's a news release, right? Your opinion just changed like that because you don't have a firm belief, a foundation to start with. See where I'm coming from? So for example, maybe let's say you are long gold, maybe because you think that, hey, someone on the forum said, gold is bullish, he backed up with a number of fundamental statements, and you buy into gold. Next thing you know, you watch CNBC and they say, gold is the price is too high. Maybe a very famous, macro investor said that, gold is, overbought and it's about to decline over the next 2-3 months. And you get scared and you sell off your position in gold. And this is how you sway from one position to the next, getting swayed by opinion, getting swayed by news. And that's because, again, it's due to, number one, right, you don't do the work. Without doing the work, right, you will easily get swayed by news and opinions. Your trading will be all over the place. Your actions are inconsistent, and what happens? You get inconsistent results. Okay, so that's number two, right? Getting swayed by opinions and news. Number three, you are trading without an edge in the market. So this is really a message, right, to those traders who think that to be a profitable trader, it's all about your risk to reward ratio. Oh, Rayner, I aim for a minimum of a 1-to-2 risk reward ratio on each trade. Oh, Rayner, all I need is proper risk management. Oh, Rayner, all you need is the right trading psychology. Psychology is like 80% in trading. Well, I'm here to tell you, right, you can have the best psychology, you can have the best risk management, you can have the most optimized risk reward ratio that you can think of, right, risking $1 to make $20, blah, blah, blah. But if you don't have an edge in the markets, if your trading strategy, right, doesn't have an edge in the markets, then guess what? All of this is useless, right? Very simple example is a coin toss, right? Let's say you have a coin in your hand. Every time it comes up head, you win $2. Every time it comes up tail, you lose $1. Clearly, right, that coin toss, right, is going to work in your favor because that coin toss gives you an edge over your opponent. If you flip it the other way around, every time the coin toss comes up head, you lose $2. Every time it comes up tail, you win $1. You can see that no matter what, right, if you have that kind of odds in that coin toss, the risk management, the psychology, all this is not going to help. Okay, so you must have an edge. It's the same for trading. You must have an edge in the markets. Your trading strategy, right, got to statistically prove to you that it makes money in the markets. That's important. And number four, wrong expectations in trading. So many times people get involved in trading, the financial markets, because they want to generate another source of income, a passive source of income. I want to make an extra $10 per day. I want to make 500 pips every week, blah blah blah. Now here's the thing, right? If you have this kind of expectations where the market is like your ATM where you're supposed to make like $50 every single day, then what happens is that when your expectations are not met, then what happens? Well, you find that you will be doing funny actions, right, to meet those wrong expectations of yours. So for example, let's say you have an expectations of making, I don't know, 20 pips a day. Okay? Let's say you got 20 pips on Monday and Tuesday. So in total you got 40 pips. That's nice. But on Wednesday, somehow, the market just doesn't seem to be acting in your favor. You're down currently, let's say 20 pips. But instead of taking a loss, right, you tell yourself, no, I got to force out this 40 pips today, Wednesday. So what do? You average into your losses. You widen your stop loss, hopefully hoping that the market would reverse back in your favor and you can earn that 20 pips for the day. End up, instead of losing 20 pips, right, as originally planned, you lose 100 pips on that day. So that 100 pips loss, right, is not enough, right, to even cover, right, the profits that you have made on the earlier 2 days. So can you see you end up actually, negative, right, for the week. So can you see how that wrong expectations that you have, right, of needing to make money every single day actually cause you to take actions, make decisions, right, that is actually detrimental to your trading results. So the key point that I want to share here is actually to understand, right, to have the right expectations from the market. Or rather, should I put it right, don't expect anything from the markets, because the market will reward you, right, when it wants to. The only thing that you can do, the only thing that you can control is your losses. You can't control how much the market wants to give you. It will give you where it wants to give you, and you can't say, I want to make a profit every day. Oh, I want to make 500 pips a week. No, the market doesn't care what you want. It gives you when it wants to. The only thing that you can do is to control your downside. Okay, so that's number 4. Right, most traders, they have the wrong expectations about trading. And lastly, number 5, this is very important. Many traders, right, or rather maybe it's the way we are being brought up, right? We don't have critical thinking. We don't ask why enough. We just take whatever we get, right, at face value. And that could be maybe because of the education system that we are being brought up with, right? The education system, since we are young, right, there's always 2 answers. It's either yes or no. Okay? The answers that, you do in exams, there's only like so-called one correct model answer. Any other answers is wrong. And that way of thinking, right, or that way of approach, right, of bringing you up, right, cause you to stop, thinking deeper, right? Because after all, there's only one correct answer, right? Why bother, finding an alternative since there's only one correct answer? So you take whatever that's given to you at face value. And however, in the real world, it's not quite like that. In the real world, there is yes, there is no, there is maybe, there is 60% yes, 40% no. There's gray areas. And it's the same for trading, right? There is no like best strategy, there's no best parameters or whatsoever. You have to develop critical thinking skills. And one way to do about it is very simple. Just ask the question, why? Right? This is something like, for example, I have kids now and they keep asking, why, Papa? Why? And it gets irritating, right? But you can see that, when you are young, when you are, kind of like naive, right? You ask a lot of why and you get a lot of answers that you might not have thought of before. And the point I'm trying to bring over here is that it's the same for trading. You don't want to take anything that's being shared on YouTube, on forum, or even what I'm saying here at face value. You want to ask why. You want to develop critical thinking skill to think on your own so you can make the right decision. And not just make decision based on what somebody says, just because Rayner says that, oh, it means he's right, I'll just follow him, right, because he's the guru. No. You have to develop your own critical thinking skill. For example, let's say I share with you a trading strategy that buys the 200-day breakout. You don't want to think that, oh, Rayner says the 200-day breakout is the best strategy, I should trade it. No, you want to ask yourself, why? Why did Rayner say to trade the 200-day breakout? Why? And then maybe I say, let's say I have a 3 ATR trailing stop loss. The next question you ask yourself is, why did Rayner go with the 3 ATR trailing stop loss? Because once you have that why in place, then you go about looking for answers to answer the why. So that's where, again, right, work is involved, right? You got to do your own research, your own testing and stuff like that. And it all starts with why. Don't take anything at face value, right? This is so important, right? Especially when you are trading with your own real money. You don't want to just take any Tom, Dick, Harry, Mary, Jane opinion, right, and risk real money with it. Okay, so as a quick recap, right, these are the 5 likely reasons why most traders fail. Number 1, you're not doing the work. Number 2, you get swayed by news and opinions. Number 3, you don't have an edge in the markets. Number 4, you have the wrong expectations about trading. And number 5, you don't have the critical thinking skill. And the best part is the good news is this, is all this, right, can be fixed. It can be fixed. It's not permanent. Okay, so once you know which areas you're lacking with, right, take steps, take the necessary work, right, and walk down and stop making those mistakes and walk down the right path. Sounds good? With that said, I've come to the end of today's episode, and I will talk to you soon.